All right, guys and gals, back to work. Back to work. Boy, oh boy, what a bloodbath today. The rug gets pulled out. We gap down and finish the day all the way at those lows. Wow. Well, here's the good news, though. Anytime we see a big sell-off, like we saw today, there are two very simple trades I always look for the following day. And I'll tell you, the first scenario tomorrow, the first trade for tomorrow, very simple, very easy to learn, easy, consistent way to make money. But if we're lucky, the second scenario, not as common, but I'll tell you, it's a lot easier to make money with that second scenario. So we're going to cover both those trades tonight, the easy one, and if we're lucky, number two tomorrow. Again, by the time we're done tonight, don't you worry, we'll have an easy roadmap to make some money no matter what these crazy markets throw at us on Thursday morning. But now before we jump in though, into my favorite trades for tomorrow, we're going to cover the entries, the exits, easy roadmap for tomorrow. Before we do that though, make sure you subscribe to our channel. You don't want to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button for me, will ya? And give me a shout out, give me a hell yeah down in the comment section below. Thank you so much for tuning in, supporting our channel. Enough of the intro though. Let's go make some money on Thursday morning. Charts are all ready to go, as you can see. Nasdaq triple Qs are all ready. Oh, the E-mini and the SPY is ready. I have two very important clues right now on these charts that are telling us where the money is made on Thursday morning. One of those big clues is right here on these 60-minute time frames. As you can see, the market now has rolled over on the 60. We definitely did not get that reversal we talked about in last night's video. We get that dump over and that continuation for the bears on the S&P and SPY, that rollover, that continuation for the bears on the Nasdaq, the triple Qs. The bears have good separation off the moving average right now. And for now, the bears have full control over momentum going to the rest of the week here this week. And by the way, a very good example of why we don't pick bottoms. We talked about that last night quite a bit. We don't pick bottoms. We wait for good signals and never got any good long signals this morning in our trade room. So we're bearish right now on the 60-minute time frame. That will flip our directional bias the rest of the week, at least for now. Now, this is a very, very big move down today. And again, whenever we see those big sell-offs, there are two types of trades we look for the following day. Before we dive into our tick charts and talk about those two specific trades for tomorrow, let's make sure we all check our schedule for tomorrow because we get some more big news coming tomorrow morning again. Durable goods orders and GDP, of course, GDP being the big news report coming out tomorrow at 8:30 Eastern time. We don't have any more big earnings the rest of the week. Next week, we've got Amazon, Apple, Microsoft, Meta, big earnings next week, but nothing left this week. Tomorrow, it's GDP, and you better come back tomorrow night because the biggest news of the week is that personal income number at 8:30 Eastern time. But again, keep your eyes on that GDP tomorrow morning. We'll have a front row seat for that tomorrow in our trade room at 8 o'clock Eastern time. But let's get back to our charts though, because hopefully by now you know, right? It's good to know when the news is, but the money is made on the charts. I mentioned earlier, we certainly now have the bears in full control of momentum. Let's now go to our tick charts. And of course, I always trade off tick charts in our trade room. This, of course, is a 7,000 tick chart. All the time frames up there for you in the upper left-hand corner. And if you're watching for the first time right now, welcome to the channel. This is the 21 EMA. It's pretty much the only indicator we use to find lots of winning trades each week, every morning at the opening bell. I mentioned earlier, there are two very specific types of trades we look for after a big sell-off like this. Let's cover the first one here right now because it's by far the most common, but I'll tell you right now, you want to stick around all the way to the end because the second scenario we'll cover in the Nasdaq, again, just might be the most lucrative trade of the week here this week. Now, anytime I see a big sell-off like this, there's one very consistent way to make money. I'm expecting now a two-legged pullback up into key areas of resistance and a retest of that low. Now, there are plenty of ways to make money in this scenario. I can buy it during that pullback. I can sell it on the way back down to that low. And if we're lucky, we can buy it off that double bottom reversal off of that low. That's the basic idea, the two-legged pullback and a retest of the low. And again, this is just one of the two scenarios we're game planning for tomorrow. So let's break this down because I want to give you guys the entry triggers we'll use to buy it off the low, sell it off the high, and buy that double bottom. Now, first of all, during that two-legged pullback, what I need to do is trap in some bears with a bear trap. Now, bear traps are very, very simple. It's a higher high in price, a move right below a low, a strong, in this case, green candle closing above that 21 EMA. That will be your bear trap signal to get long going higher. Now, one word of advice, right? One word of advice. Whenever I'm going against all this bear momentum, these are half-size positions, quarter-size positions. They're not full-size positions, right? Going against all that bear momentum. So please trade accordingly. Now, two-legged pullback. When I think two-legged pullback, I think about a measured move, a bit more than a measured move. We all know measured moves, right? AB equals CD, right? So this one leg, two leg, I want to go a little bit more than a measured move. That will give me the general area of that two-legged pullback. Now, as we learned today, we do not blindly do anything, right? We always wait for a good signal. My favorite signal on this is going to be what I call a buyer failure pattern. Hopefully buyers will come in, think this now as a reversal, and try to buy this. Let them try once, let them try twice. Why twice? Because now they're trapped. Now I can use their stop losses now and run this thing back down. Stop loss, of course, run this thing back down to retest that low. Now, on the way back to that low, this is we look to add to our position. And to do that, I want to sell as high as I possibly can. And that always means a bull trap pattern. Bull trap pattern, of course, is a lower low in price and a trap right above that high. Now, think about this. Anybody who sells high up here, they're taking their profit down here. Sellers up here become buyers down here. This is a horrible place to be selling right now after a big move down. That means a great spot for us to trap in some rookie sellers and run their stops. Think about this now. Rookies come in, bears once, bears twice. Again, why twice? Because I want those stops to squeeze those stops. Now, at this point now, the market wants to go back and take out that high. Very, very important. As it runs higher, we're looking for that same pattern right there. Same pattern right there. It's going to be a classic technical bear trap. Higher high in price, move right below that low. And again, we know where the market wants to go. It wants to go back up and take out that high. And oftentimes, this creates one big trading range: buy low, sell high. So this is the sequence I always look for. Again, very common, the first of two game plans for tomorrow morning. It's a bear trap during that pullback. Again, half size position, quarter size position. Then think two-legged pullback, a bit more than a measured move. And again, I have no crystal ball. It may go a bit higher than that, right? So don't go fooling around blindly selling into that move. Trap those buyers trying to run this thing higher. Let them try a couple times. That's a failure pattern like we teach in our free video classes. And then as we go lower, add to the position or jump in if you miss that two-legged pullback. That's going to be a bull trap pattern. And again, once we retest that low, then we get in the bears coming in. We trap those bears in. 2 tries, run those stops, look for that bear trap pattern as we go higher. And again, profit comes off at that high. That's the two-legged pullback and that bounce off that low. Now, that's the roadmap. One more variation of this, because these oftentimes do come with different variations, especially during the summertime season. For example, a lot of times we're going to get that two-legged pullback, but there's so many bears up here that come in, the price gets whacked right back down again, and we don't get a chance to trap those buyers in and run back down to that low, right? I want to trap them in up there, use their stops to run back to that low, right? Sometimes we don't get it. Sometimes what happens is it'll run up, it'll get whacked right back down again, and we'll begin to grind going lower. The key here is do not chase this going lower. We have to keep our risk reward ratio back to that low. We have to keep that in line. To do that, what I do is I mark a trend line off that low. I bring it now up around that high. That creates a channel. I then look left, find a prior swing, and I want bull traps. I want bull traps or buyer failures above that moving average on the way back down again. What this does is this allows me now to have a small amount of risk for a large amount of reward. That's why it's so important. If we don't get that good signal up here and it starts grinding down like this, focus on selling as high as you possibly can, and they'll almost always be above a prior swing. And as always, it's the first test off the high of that channel, right? And again, once we go back to retest that low, anybody who sells on the way down, they're taking their profit down here. I then trap those rookies in, 1 try, 2 try, and same thing, that failure into that bear trap pattern on the way back up. Profit off back at that high, and think about that rotation back and forth again. Very easy, very consistent way to make money for tomorrow. Now, before we talk about some more variations of this, let's slow down for a second, because I know most of you guys watching right now, you know these patterns, you know how to make money with traps, failures, two-legged pullbacks. But if you're watching for the first time right now, this might be a brand new language for you. Don't you worry though. I teach this entire strategy. I have hundreds of examples of V-top reversals, two-legged pullbacks, lots of trap examples. I teach the entire thing, the entire roadmap in our free video classes. Not to worry, I'll put a link up top for you, upper right-hand corner. Grab that link that popped up there and take that free video course, because the strategy I teach in that short video series will teach you a remarkably simple trick we use in our members trade room, so we always know where to find the best winning trades each day. More importantly though, I want to help you start making money on your own, which means timing the proper entry. I'll teach you 4 my favorite entry patterns, traps, failures. Again, you'll learn the entire roadmap. It's all linked up top there, upper right-hand corner in that free video course. Guys, the markets are great right now. If you're not making consistent money every day, if you're missing the best trades each day, again, hit that link up top there. Take that free course. It is perfect for someone who is serious about making money in these wild markets. And also be aware too, I'm going to put all the important links tonight, description of the YouTube video, put the free class links down there. Also be aware too, we trade together every morning, 8 o'clock Eastern time in the trade room. I'll put trade room membership information down there for you. And also too, I post a lot of updates on Twitter or X throughout the day. If you're on X or Twitter, I post videos, charts, psychology stuff. Give me a follow. All the details again in the description of that YouTube video. So that is how to learn the entire roadmap, and these videos make a lot more sense once you go through that free video course. So I mentioned earlier that two-legged pullback, trap the buyers in, right, and retest that low, and then buy that double bottom reversal. Let's talk about one more variation of this, and then we'll go to the Nasdaq and cover that very popular second scenario I mentioned earlier on in the video. Again, I want that two-legged pullback. But let's say, for example, this thing simply V-bottoms off that low and simply goes straight up. What if all we get is a straight line going higher? If all we get is a straight line going higher, the buyers are going to want to retest that high before they go back to that low. So again, a two-legged pullback can be sold, right? A one-legged pullback though, because it's such a big move down, it may squeeze back up here overnight again, right? Crazy things happen sometimes during low volume summer. If all we get is a one-legged pullback, I'm then going to be a little more conservative on the entries and look for bull trap entries to make sure I sell as high as I possibly can, because we may end up holding one of these areas, going back and retesting the high and then back down. I don't want to sell it as it's going lower if all we get is a straight line running up. It has to be, it will not be a typical failure pattern. It'll be a typical bull trap pattern. Buyers once, buyers twice, go right there, off that high right there. That with a signal if all we get is one leg going higher, right? Makes sense? Very important, small, but very important detail of a variation of that. If we get that strong pop up, right, and this thing starts to pull back and we get that pop up and start running higher now, if for some miracle, right, this thing reverses and V-bottoms like that, do not chase after it. What we'll do is, this will obviously flip this now to being a bull market. If that happens now, then we don't want to buy high. We now look for that two-legged pullback. Remember, two-legged pullbacks, a bit more than a measured move. We don't pick the bottom on that. We get that one try, two try failure, failure into trap combination we talk so much about on these videos. And again, we're off to the races there, right, for the buy side. At the same time, too, I'll be looking for some larger channels, right? Larger channels to combine, again, that two-legged pullback off it. We don't pick the bottom, right? So again, if we do get that one leg, and again, I would expect them to want to go back and retest that low here with all of that momentum. But crazier things have happened. You know that's for sure, right? So if they hold it and they start grinding and separating and running higher, all right, bulls are back in it. Don't chase after it. Don't chase after it. two-legged pullback, then bear trap or a failure pattern, as we call it in our video classes. Failure pattern, trap pattern, target back to retest the high. And I would imagine that we'll probably end up in some range up there. We'll talk about that more tomorrow in our trade room. All right, guys? So now you got that kind of that first roadmap, that first scenario for tomorrow. Now let's go to the Nasdaq right now and talk about that second. And again, the second one is not as common these days, but I'll tell you, if we're lucky, we'll get the second scenario for tomorrow because it can be a lot easier to make money with. That one's pretty easy that we mentioned there before on the S&P. On the 60-minute time frame, right in the Nasdaq, again, we had that big run down. Obviously, no reversal, right? Obviously, no reversal and a continuation. That continuation definitely gives these bears a whole lot of momentum on their side. And again, for now, right? For now, this may not last very long. We've seen this before the last couple of years, right? This may not last very long, but as of right now, the bears certainly have all control of momentum. Over the tick chart right now, a 4,000 tick chart here on the NQ or the triple Qs. And again, same idea, right? Big move down. The same game plan is in play here. Get that two-legged pullback, a bit more than a measured move, trap those buyers in, that failure into that trap combination on the way down. And again, great spot for a bear trap down here. Trap those bears in once, twice, squeeze those stops. Think about that run back up again. Same basic stuff, same variations I mentioned earlier on the S&P. I'm not going to go over it all once again here because I know your time is valuable here on these YouTube videos. The next one is, let's talk about going sideways, right? Because oftentimes when we get these big moves like that, we get some big news coming on Friday morning, that PCE number, big earnings next week here. This market may get paralyzed and go into a range down here. If we go into a range, the most important thing that you need to remember about ranges is that ranges are magnets and they love to rotate back and forth. So I don't know where the range will be right now, but if at any point tomorrow we start seeing a range here, we now start looking for that rotation back and forth. Now, ranges, they like to make the amount above, the amount below, right? Back and forth, they rotate back and forth. We're going to buy low and sell high. So the way you do this is in my trade room, we talk about failures at the edges, and traps as it rotates. Okay, write that down. Failures at the edges and traps as it rotates. And this will make sense, right? So as we go higher, we know we are bearish overall. That range, remember, ranges are balanced markets. Ranges act like a magnet, right? So as we go higher here, I'm looking for failures at the edges. Now, again, a failure pattern is very simple. As we go higher, I'll bet there'll be a bunch of rookie traders who don't watch my videos, and they'll think this is a reversal. After a monster bloodbath we saw today, it probably isn't a reversal. It might be. And again, if it does pop and separate like that, that two-legged pullback I mentioned earlier will be an easy way to buy it on the pullback. But again, the odds aren't that good for that tomorrow. Possible, but not probable. What's more likely is those buyers will come in, try once, try twice. We can trap them in with a classic, my bread and butter pattern in a range market like this is a failure pattern. Remember, failures at the edges, and then as it rotates, it's always going to be a trap. Failure at the edges, traps as it rotates, right? Again, buyer failure pattern. That's pretty much a classic example in our free video classes, and a bull trap pattern. Remember, lower low in price, a trap above that high. Now, remember, ranges love to rotate. So the amount above the range is the amount below the range. This is why ranges are oftentimes more lucrative to trade, because now we're not taking all of our profit off at that low. We're not trying to buy off that low. If there's one mistake you do not want to make tomorrow, it's going to buy the low of that range, because ranges like to rotate. That's why these are oftentimes more lucrative situations after a big sell-off like that. So we know now the amount above is now the amount below. We now leave our final targets down there. Now, once we take out that pendulum swing, as we call it, now remember, failures at the edges, traps as it rotates, right? This is not a good place to be selling, especially not after a big move down like this. We're way too low now to be selling, especially with a range there above us as a magnet, right? So same thing, trap the bears in. One try, two try. Again, failure pattern, right? Failure pattern at the edges, and then as it rotates, it's traps. So failures at the edges, traps as it, right? Traps as it rotates, right? Makes sense on that? Okay, so that's the basic scenario, right? Failure, trap, failure, trap, rotation, back and forth. Go up, take our profit, sell it back down again, rinse and repeat. Let's now talk about one more variation of this, because this can be a tricky one if you're not paying attention. Again, imagine now we have a range for tomorrow. And again, this may not be where the range is. I don't know where the range will be yet, but we'll keep an eye out for tomorrow morning in our trade room. Where things get a lot more difficult is if we go lower first, okay? If we go lower first, now this becomes, well, you'll see. If we go lower first, now all of this bear momentum is a lot more difficult to reverse, right, going higher. So in this situation, now we look for what would basically be a technical bear trap. It's bears trying once, it's bears trying twice, it's a higher high in price, and a trap right below that low. It's very important that you understand the difference between what I call a failure pattern and a trap pattern. Okay, trap patterns are ideal because they get you in nice and low, right? Nice and low. Failures are a little more aggressive. And again, you'll learn more about those, a lot of examples of those inside the free video course. What I want you to really be careful with though is, if we get that bear trap off that low, and again, that technical bear trap, not simply your typical run down 1, 2. See, failures, we buy technically as we go higher. Right? A trap, you're buying below that low. Very small, but very big difference. It's oftentimes the difference between winning and losing on that trade. What I want to be aware of though is this changes the situation, because now after such a big move down like this could easily what I call a slingshot reversal back up again. When this rotates going higher, and again, as it's going higher, we keep looking for those bear traps, right? Traps as it rotates. That doesn't change at all. The difference now, though, is now as we run back up and take out that pendulum swing, now that bear momentum overall now is turned very bullish in the short term, right? Not long term, but short term. So when I rotate off the low like this, there's so much bullish momentum. The buyers are going to have a lot of momentum in their back, and they're going to have a better chance now at breaking this out and keeping going, right? I don't want to get run over by that rotation off the low. What I'm going to do is, oh, and again, by the way, right, if this thing keeps on grinding, if we get that separation, remember, separation is strength. If that happens now think about that range now, and think about that same 1, 2, right? A bit more, then a measured move, trap the bears in and go from there, right? That breakout pullback. If it really starts to run and we get that reversal going higher. What I'd rather do though is as we go up here now, and I apologize, I am out of ammo on my drawing tool here. We rotate off that low, we trap those bears and we squeeze running higher. Again, all that momentum now is running off that low. This could easily really squeeze running higher. This is where another trap pattern, a technical trap pattern, is key here. Again, buyers trying once, lower low, buyers trying twice. And again, the reason why I make a small adjustment on this entry right now, again, a technical trap pattern, lower low, trap high, not your classic 1, 2, failure pattern, right? Again, why the difference? Because in this situation, very different, very small difference, very important difference. It's rotating off the low of that trading range. That means this momentum now is a lot stronger going higher. Therefore, to get that top taken out or to pick that top out there, trap the buyers once, trap twice. I want to sell as high as I possibly can because, again, as it goes lower, they may hold that and keep it going higher, right? That is a slight, again, but very important variation of this if we go lower first and then rotate off of that high, right, guys? If you go into a range, it's failures at the edges, it's traps we rotate. Just be aware of that fake out, breakout off that high. Again, that bear trap entry, higher high, trap below that low. And remember, whenever I'm going against all the momentum, these are half-size positions, quarter-size positions. We'll talk about that more tomorrow morning in our trade room. Right, guys? That's the game plan after a big sell-off that we saw here this afternoon. Now, the plan is set for tomorrow. Don't forget, tomorrow morning, the place to be 8 o'clock Eastern time, every morning during the week in our trade room. The best way to learn this stuff is come out and trade it with us every morning at the opening bell. The easiest way to start making money is come out and watch me do it and trade right along with me. Guys, I'll put all the important links tonight in the description of the YouTube video. Start first on the free video classes, right? Learn the basic roadmap, learn all the setups. Most folks tell me they can start making money on their own with that. So start there first. And I'm sure sometime soon I'll see you trading with us in the morning room as a member. Right, guys? A wild day tomorrow. Remember, wild market today oftentimes means big opportunities for tomorrow. So hope you learned a bunch. Hope you make a killing tomorrow. And hopefully I'll see you sometime soon trading with us in the morning room at 8 o'clock Eastern time. In the meantime, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye for now.